traders, welcome to a week. Last week certainly finished on a strong note. Well, I think it was a lack of volatility, a lack of volume in the market as US traders left early for the long weekend, leaving price moves to happen aggressively on the lack of volume. And with the week ahead, we've got the US on holiday for July 4th, and then we've got the RBA cash rate expected to raise by 50 basis points, and then we'll have the minutes from the Fed. That's important to note, finished up by jobs numbers from North America. A couple of talking heads, but I don't think that will provide too much. But there's enough there to create some trading opportunities throughout the week. So I want to start with the bond market. Clearly had a bit of a sell-off on Friday, and certainly for most of that week as the market starts to price in a recession rather than worrying about inflation. Certainly the inflation story on Friday seems to not be the story anymore. So that'll be interesting to pan out to see where the Fed move rates. Yield curve is suggesting that the Fed will peak maybe even in July, with the interest rates looking to come down in December. So I might get a Christmas rate cut. However, we've got to deal with July, so where will interest rates go between now and then? With the market forces suggesting interest rates are going down, but the Fed are raising rates in July, I think we might see a turnaround in this bond market and run into the July rate cut, or rate hike, sorry. So I wouldn't be putting too much onto this sell-off. I think the sell-off was, as I said, the US market was running away for a holiday, so I wouldn't put too much read too much into the sell-off, and that we'll see a bid come into the US bonds as July progresses. What we are seeing though is a clear sell-off in commodities, and that's putting pressure on the Aussie dollar and the other commodity currencies such as the CAD and the Kiwi. CAD not so much, because energy markets are still quite elevated, as we can see here in thermal coal and in oil. And if we come across to the other commodity markets, we can see natural gas is a little weaker, but European gas is going through the roof, and for obvious reasons with what's happening in Russia-Ukraine. Looking at the other commodity pictures, we'll just come in here and see that yes, oil's up, Brent oil is up, gasoline up, natural gas clearly getting a touch up. Copper though, along with iron ore, is also having a major impact on the Aussie dollar as it breaks below that recent consolidation and heads down. And remember that this is a bellwether for economic conditions, so clearly there's something going on that would suggest we're going to have a recession sooner rather than later. In the soft commodities, we're seeing also a major sell-off across the board, really. Cotton's treading water, orange juice also sort of just treading water, sugar coming off though, coffee sideways, corn coming off, wheat coming off, soybeans coming off, cocoa coming off, oats coming off, soy meal sideways, rough rice pretty much sideways, but not near the elevated highs. Soy oil, lean hogs sideways, cattle bit of an uptick on Friday, and as with lumber, and then oil, orange juice also pretty much sideways. But clearly the trend is more to the downside as the economy starts to bite and people stop spending on essentials. In Stockland, bit of a relief rally on Friday. I wouldn't read too much into that. Again, half the market wasn't really there, and I would be looking to fade that again during the week. as the US comes back. Today's going to be pretty tricky. Monday's always tricky when the US is on holidays. Sometimes, or quite often, you will get a bid in the markets as the US are not there, and then Tuesday or Wednesday really, Tuesday morning in the US, Wednesday night here in Australia, you'll see that reverse as the US come back in, and I would suggest start to push the market lower again. But perhaps that if the market's looking at a recession and lower interest rates and cheaper money, they might be have a bid on stocks. I guess we'll have to wait to see. But the US dollar majors is where I want to focus today. And we're seeing, yes, there was a sell-off on the US dollar, but it is a higher high and a higher low. It closed in the middle of the range. But again, that's because of the US holidays. And I see this as just another cycle. We're seeing that cycle, another cycle, and I'd be looking for more and hitting that top there as US interest rates are still heading north, even though market interest rates are sort of pricing in lower. You've got the short end still quite high. Interestingly, the euro held on to this, and if we go and have a look at this, this is, you don't often see this, a head and shoulder continuation pattern. And with this, the neckline, and if that neckline breaks, then you're looking at this, which is 400 odd pips as the target, which would put the euro down at parity of 1.00. So that'll be interesting to watch and see if that neckline holds, and if it doesn't, then you might look to trade the break of that. So you're getting short here, your stop losses there. And yeah, you're trading that lower. Better opportunities though I see here in the pound, clearly under pressure economically, politically, and due to the market forces. We saw the pound break through this minor support line and come back and retest it, and I'm looking to fade the pound off that. I think is potential opportunity this week. There's not much news on the UK. So it'll be all market force driven, and I think that's an opportunity there. Over in the US dollar, the Aussie dollar, similar idea is that it broke through this support level. Now we do have the RBA coming up, in 40 or 36 hours or so, tomorrow afternoon. And I would probably look to fade off this level after the RBA. You might see a bid into the RBA, and when they do raise the interest rates, you might see some buying come into it. I think it'll be short-lived because the commodity markets will sort of dictate the Aussie more than the interest rates at the moment. The RBA's interest rate settings are still pretty low compared to the peers globally. So, I think we'll be looking to fade that post the RBA and that resistance level similar to the pound. But I think the pound's the one for this week, and we'll be looking once the market opens in 15 minutes. We'll be looking for an opportunity to fade the sterling off that level, which is effectively a nice round number of 121. So that's it for today, guys. Good luck. General advice only, yeah. I don't know your positions or financial situations. So this is just my opinion and my view of the markets. Kiwi is another potential one, also on the shorter time frames, if you like. Yen, technically it looks like it could come back down to this 130, 131 level, but that require a fair bit of selling on the US, and I don't really see that happening. So it'll be interesting to see how that plays out. There's a bit for you to consider and look at. All the best with it, and we'll come back tomorrow.